Have you ever just sat and wondered, what if there were no income taxes, no IRS breathing down your neck, no April 15th deadline scramble? Well, there's a pretty radical proposal making the rounds to do exactly that. Basically, to turn the clock back to the 1890s. So today, we're going to dig in and ask the big question. Can we really fund the entire U.S. government just by using tariffs?
Now, seriously, just take a second and picture it. You keep 100% of every dollar you earn. The appeal is massive, right? But is it actually doable, or is it just a fantasy that would totally wreck our economy? Let's run the numbers and find out if this is a genius idea or, well, a financial disaster waiting to happen.
All right, so to really get our heads around this plan, we first need to understand its engine, the thing that's supposed to make it all work, tariffs. Let's start with the basics.
So what even is a tariff? It's really simple. It's just a tax that gets slapped on goods when they're imported from another country. The whole idea is that by making the imported stuff more expensive, you encourage people to buy things made right here at home, which in theory helps out your own country's economy.
Let's make this real with a quick example. Say you've got a TV made in China that costs $100, and a similar American-made TV costs $200. Well, to even things out, the government could put a 100% tariff on that Chinese TV. Boom. Now they both cost $200 inside the US. The American TV looks a lot more attractive, and the government just made some money.
Now here's something a lot of people get wrong. The foreign country doesn't pay the tariff. The company that imports the item into the US pays it. So in our TV example, if an American company is bringing in those TVs from China, they're the ones writing the check to the government, not the factory in China.
You know, this idea of funding the government with tariffs, it's not new. Not at all. For the first 100 years of America's history, that's pretty much exactly how we did it. But here's the catch. The government back then was tiny. It took huge events like the Civil War and then World War I to bring in the income tax, which ended up sticking around because it was a much more stable way to pay for a country that was growing fast.
And that brings us to today. The scale of our government now is, well, it's a completely different universe. And that creates a financial gap so gigantic that any plan to fill it with tariffs faces a nearly impossible uphill battle.
Okay, here's the number. The one number this entire debate really hinges on. Every year, the government collects about $2.2 trillion just from personal income taxes. So if you want to get rid of that, you have to find $2.2 trillion somewhere else.
And where's all that money going? Well, you're talking $1.5 trillion for Social Security, another $1.5 trillion for health and Medicare, $750 billion for the military, and a mind-blowing $850 billion a year just to pay the interest on our national debt. The numbers are just staggering.
And get this. This is a super important point. We're not even starting from zero. The country is already spending about $1.7 trillion more than it collects each year. So any new plan doesn't just have to replace the income tax, it has to do it while we're already in a massive financial hole.
Okay, so let's actually do the math. Let's see what it would really take for tariffs to fill this colossal gap. And the results are pretty shocking.
If you wanted to go all in, get rid of personal income tax, corporate tax, employment taxes, the whole shebang, you would need to increase the money we get from tariffs by 44 times. That is not a typo. A 44-fold increase. It's just a colossal leap.
So what would that feel like in your day-to-day life? Honestly, it would be brutal. An iPhone could jump from about $1,500 to nearly $4,000. A gallon of gas? It could double to $10. And the cost to build a new house? That could go up by 100% because suddenly almost every single imported good and material costs a fortune.
And that brings us to the biggest problem, the fatal flaw, really. For most people, the whole point of the plan would be defeated. You'd likely end up spending way more on all this expensive stuff than you ever would have paid in income taxes in the first place.
But hey, what about a more modest approach? Let's say we just replace the personal income tax. Well, even to do that, you'd have to slap a 55% tax on every single thing we import. That would still trigger a huge economic shockwave, and it would hammer the wallets of poor and middle-class families the hardest.
So, when you actually run the numbers and look at what it would do to prices in the real world, the conclusion becomes pretty darn clear. The math just doesn't work.
So here's the verdict. It's just not feasible. As awesome as the idea might sound, the U.S. government today is not the same small-time operation it was a century ago. It spends way, way too much money for tariffs to ever come close to covering the bill. But wait, that's not really the end of the story, because the fact that so many people are drawn to an idea like this points to a very real, very valid frustration, wasteful government spending. And when you see some of the examples, yeah, it's easy to see why people are so fed up.
I mean, just look at some of this stuff. $3 million to study steroid-induced hamster fighting. $500,000 to maintain a self-cleaning toilet that hadn't been used in years, 75 grand to blast lizards with leaf blowers, and since 2003, a truly staggering $2.7 trillion has just been lost to payment errors. It's just absurd.
So, while this deep dive shows us that tariffs probably can't replace income taxes, it leaves us with a much bigger, much more important question. The frustration is real. The waste is documented. So if this plan isn't the solution, then what is? How can this kind of spending finally be brought under control? Now that's the real challenge to think about.